Welcome back, everyone, to another video. Here we have questions on compensated absences. What is that? Well, that's vacation. That's sick time. That's when you are away and the company is still paying you. What a life, right? You are just getting paid, although it could include something like sick leave if you're actually sick, or unfortunately, if you are injured on the job, that could be workers' comp. But let's take a look at what the question is asking. What will Jackson's the company, record as unemployment insurance expense for the year? Per state law, Jackson Inc. pays 5% of eligible gross wages for unemployment insurance. Eligible gross wages are defined as the first $24,000 of wages earned by each employee during a year. Jackson had 10 employees, each of whom earned $40,000 during year one. Let's think about this. I'm going to initially cross off the $40,000 because the insurance is only going to affect the first $24,000. We don't care how much they make after that. Awesome. Now, from there, where do we go? I don't know. You tell me. No, I know. I've practiced some of these questions, and you will too. Now, let's think about it. We have 10 employees. We also have $24,000 per employee. So what does that tell us? That tells us the total gross wages up to that limit that we need to account for. And then what are we accounting for? We're accounting for unemployment insurance and the premiums on those. That would be 5%, as stated. Now, this is essentially saying Jackson pays, they have to pay for unemployment insurance. That's the law. And they have to pay 5% of $24,000 for however many employees. Now, if they had employees making $22,000, sure, we would use $22,000 instead of $24,000. Those are all of our factors, and that's going to get us to our final answer here of $12,000. Not $1,200, $12,000, because $1,200 is an answer as well. Final answer here is letter A. All right, moving on to our next wonderful question that will help you pass. What do we have here? We have, we're counting someone's bonus. Hopefully this will be your bonus at some point. What amount should Luke Company, that's the company, accrue in year 2 for its CEO's bonus? All right, Luke Inc. is obligated. Oh, they have to. That's a pretty good deal. You get a bonus no matter what. Obligated to pay its CEO a year-end bonus equal to 10% of the company's income after the deduction of the bonus and before income tax. All right, so a little incentive-based compensation, not competition, compensation. It's an incentive for the CEO to get earnings up. All right. Luke's income before the bonus and income tax for year 2 was $200,000, and Luke's income tax rate was 35%. It's pretty high, isn't it? Damn. Oh, well, let's see where we go from here. Now, we want to find the bonus, and like so many questions in this wonderful exam, we're going to use some algebra. Let's call the bonus x, the x variable. So what does the bonus equal? The formula here, we got to think about, it's the income before the bonus. Well, we don't know how much the bonus is. It's kind of like a catch-22. So how do we account for something like that? Well, that's simply going to be 10%, right? 10%, like it says, 10% of, so 10% times the income, which is $200,000, minus the bonus. So this formula should make sense, right? Well, this x is just as big as the other one. It's the same thing. There we go. X equals 10%, like it says, 10% of the income after the bonus. Now from here, we do a little fun algebra, and let's run through it. X equals, well, we'll distribute the 10% to each of these. So 10% of $200,000 is $20,000, and then minus 0.1x. What do we do there? Well, we can bring x to the other side, so add 0.1x to both sides. That means we get 1.1x equals $20,000. And yeah, it is surprising how much algebra is on this exam. You know, it's kind of wild. Now, if we do a little math here, $20,000 divided by 1.1, divide both sides by 1.1, gives us our final answer of x equals 18,181,81,81. It's one of those repeating numbers, right? 8,1 or 8,2, whatever. It doesn't matter. The rounding here does not matter. Just as a general rule as well, I always recommend don't round until the very end. In this case, we are at the very end, so we can round. And here's our letter C, final answer. That's the bonus. They are getting an $18,000 bonus. Good for the CEO. Hopefully, like I said, that will be you. Maybe it is you today. Maybe you're a CEO going for your CPA exam, in which case, good for you. All right. Thank you all for joining today. Hope you enjoyed our section on compensated absences. Have some strength, drink some coffee, get some Gatorade in you, whatever it is that will help you power through this exam and be done with it once and for all. Thank you all for joining, and I'll see you next time.